US Fed's decision has rattled stock markets, has rattled global markets really at large. We did see the Dow Jones post the longest ever losing streak since 1974. We saw Asian markets stumble, and we saw the Nifty and the Sensex also decline over 1% in trade today. So, significant and sharp losses across markets. We have seen people worried now as far as their major economies are concerned as well. But to decode really why has this happened, the US Fed has, of course, cut interest rates by 25 basis points, but they've also projected just two rate cuts in 2025 as opposed to four rate cuts projected earlier, citing inflation concerns. But to decode this further, I'm joined by Mitali Nikore, Senior Economist. Mitali, thank you for your time. Is it really the Fed outlook that is spooking markets and investors alike, or is there more to the story?
So I think Sakshi, it's a combination of several factors. I mean, to begin with, this year they have made a rate cut of almost 0.75%, totaling the rate cut that happened at 0.5% in September. And then we saw, the 0.25. Now, both of these were very predictable. I mean, the zero point 0.5 was definitely a little higher than what I and a lot of economists were predicting. We thought it would be zero point 0.5, 0.25 and 0.25. But then they went for a 0.75 rate cut this year. Now, that's a nearly 1% rate cut. So it has a huge impact on consumption expenditure. It frees up a lot of the wealth and the income that people in the US have, that US consumers have, because it reduces the amount they have to pay for their EMIs and frees up some discretionary income for discretionary consumption spending. This obviously will boost the US economy, but of course we have to see where are these goods on which money is being spent coming from. And that's, I think, the big spook for the market. I mean, one is that, oh, when you increase consumption spending, inflation will happen. That's natural. What is not natural is if the products on which money is being spent are also becoming more expensive because of tariffs. So, at this point in time, you have goods coming into the US economy from Canada and Mexico in large, quantities because of the North African Free Trade Agreement. But if tariffs are imposed and if the US backs out of the NAFTA, it suddenly completely changes the landscape. So we really have to see how that happens. And I think that there's also a third factor, which is around investment returns. And I think with the US reducing its interest rates, with a number of European markets to follow, markets in general are a little scared. Investors will think, okay, so now I'm not getting high returns from safe markets. So they again have to go back into emerging markets and hedge their risks accordingly. So there are multiple factors at play.
Right. So multiple factors at play, but going forward, also, like you said, trade barriers, is there a potential trade war coming? All of those concerns really mounting. Donald Trump's, as soon as Donald Trump assumes office and, his duties at first, will he be sort of relooking at everything and what will be his sort of policies that will be prioritized further? Going forward, all of those concerns really mounting. Of course, he has been reportedly saying that, look, he will look at reciprocal taxes as far as even India is concerned.
No, absolutely, Sakshi. If we think about the entire tariff scenario, if we look at the entire scenario around the reciprocal tariffs that President Trump has spoken about, what is the impact on an economy like India becomes the big question vis-a-vis other emerging economies, right? So, the reciprocal tariffs will, of course, become a major sticking point in trade negotiations between China and the US. There is no question about it. It's already, the murmurs have already begun. And the Chinese are also taking it head on. If we see some of the murmurs that are coming in through the trade corridors, they are going ahead and, starting with their negotiations because, and they're also investing, massive amounts in setting up factories in Mexico, to circumvent some of these trade tariffs. But for an economy like India, our relationship with the US is very important because nearly three-fourths of our services exports, particularly in the IT sector, are still being purchased by consumers, I mean, by B2B buyers, of course, companies in the US, which are either American or located in the US. So it makes our trade relationship, particularly in the services sector, very critical. On goods trade, it's not, I mean, of course, the US is still a major market for us, but it's not as though, we would not be able to negotiate a sort of rate of tariffs, because even the India does not levy very high tariffs on US goods that are coming in. So I think, given the relationship between President Trump and Prime Minister Modi, which was observed in the previous term, and also the pace at which Indian negotiators are already working with US authorities, I really don't think it'll be that big of a problem for a country like India. But I do think that the tariffs will become a big problem for other emerging markets and BRICS economies, who will need to renegotiate a lot of agreements that have already been tied in.
Right. So really a lot has been changed as far as that framework is concerned. But thank you so much for joining us and for sharing your thoughts.
Thank you.